Welcome to the Traders Expo 2017. I'm Matt McCall coming to you live from New York. Thanks for joining us here today. I'm joined by Iuorio. He is a contributor to CNBC. You see him on TV all the time. I watch him on TV all the time. So glad to have you here, Jim.
Thank you for having me.
So let's start with the overall markets. I mean, we have had, since the election, an amazing bull market. Every day, I'm going to call out CNBC because you're on there, I get these alerts on my phone from CNBC. Market down, Trump rally over. Well, I keep getting this. Is the Trump rally really over? How long can this go?
Well, the Trump rally, it's not going to go up every day, in my opinion. And I think the Trump rally is a real thing. I think rolling back regulation, rolling back tax burdens on different companies is a theme that should project our economy in the right way for a long time. So I think the stock market's going to do quite well. Can it continue to go up every day like it has? I'm not so sure about that. I'm still bullish. I'm getting more cautious as each day clicks off. Like just even on Friday, that the rally back was amazing. I don't know how long can keep that strength.
So let me ask you this. I'm in the same camp as you. I'm extremely bullish, but you're getting more cautious. What are you doing from a trading perspective to kind of prepare for that cautiousness that could lead to a pullback?
Well, because of the low volatility, I transfer most of my long positions to long calls. I also have short put spreads instead of being short puts, just because there's not much in being short puts. So I try to replicate my long position that way. So if things fall out of bed, I'm still long that lower side put. So I've been doing that for a couple of weeks, and it's been working well. And each day, I try to shift more of my position to calls instead of being long the outright.
Okay, so let's talk a little bit about volatility, because the volatility is so low right now.
Unbelievable.
A lot of people watch the VIX, and the old adage is when the VIX is low, it's time to go, but it's been low for so long. Is that still a true indicator that you can use to really determine the market pullbacks and rallies?
I can't.
Okay.
Can you? No, because like you said, every time, if you have a system in your head, like every time the VIX goes below 12, it's time that we're due for a big pullback. Well, it hasn't worked.
Yeah.
So I think what you just use it as is if you can buy options cheap, then you switch over to using options more than you do the underlying.
Okay.
Yeah.
Do you do anything, as a random question, with ETFs that track the VIX or tracks volatility at all, or are you just more in the options side?
Those ETFs that track the VIX those have that optionality and the decay function in them, obviously, and a lot of people who use those don't understand. I just create the volatility structures myself using the actual puts and calls.
Okay.
So no is my answer.
Yeah, I mean, a lot of people, I think, it does something else, but it really doesn't do it yet.
But a lot of guys like us bash those things because they do decay quickly. But if you want to make a short-term play, they can be a reasonable thing too. But I think to do it in futures and structure puts and calls to your benefit is a much smarter way to do it.
Okay.
Much more visible.
What's one option strategy for the average person out there right now? Because a lot of people are either just getting certain options or want to get certain options that they can use in this type of market.
Well, if someone was starting, I would say somewhat low risk call spreads, low risk put spreads, whether you want to be a buyer or seller, depending on where the market's going. But to sell an outright option and not have it covered on the other side, it's obviously dangerous, particularly when you're using futures, because futures is a highly leveraged product. It's like we always talk about the tools in your tool shed. Well, the futures part of it is the power tool that if you don't know how to use it, you can come back with losing an arm. So you learn how to use it, and you do that by starting small. If you think the market's going up, put on a call spread, maybe even a cheap, fairly narrow call spread. If you think it's going lower, a cheap, fairly narrow put spread, and see and feel them. I think with options, you have to trade them several times a week to get the feel of them.
So let me ask you this then, what portion of, again, the average person, because that's who's watching this out there, should they be playing with options/futures versus building an equity portfolio?
I think you do a lot of that. Okay. You do both, particularly if you have an equity portfolio too, and you see event risk coming up and you're looking to hedge it. Some equities, you have huge capital gains taxes on them because you've had them for years, but you think we're in for an area of rough waters. That's where you use your futures to hedge your portfolio. Because we have to assume that someone who's got a long-term portfolio, the beta of it eventually gets fairly close to the market overall. If you have it structured with tech, to the NASDAQ, if you have it structured with kind of everything to the S&P, so you hedge it with futures.
Okay. Any last tip for that person out there that's getting ready, that wants to dip their toe into the futures market because they do hear, okay, I have this great leverage, something that you learned, one of the mistakes maybe you learned along the way?
Don't do anything unless you know exactly what your risks are. That's why I like to use option spreads where it's very well defined. We talk about using, in futures, they're open around the clock and you can work stops around the clock too. But that only most of the time works. Sometimes, as you see, it gaps through your stops. And when you use options, then you can define your risk exactly, know what your risk is, and start small.
That is probably the best advice. Know what your risk is. Because most people will go out there, they'll buy something, and they have no idea what the downside potential is. And that one trade can blow them up.
We've seen it a lot,
Yeah,
right?
Unfortunately, we've probably lived it at some point.
We've lived it
in our career.
I hate that
All
feeling.
Jim Iuorio, thank you so much. Contributor to CNBC, coming to you live here from the Traders Expo.